Hello everybody, my name's True Demon and I'm the Devil Stockbroker. Welcome to the stream. Thank you guys for joining. If you guys are just jumping into the stream for the first time, please don't forget to leave a like on your way in, as it helps out the YouTube algorithm and lets people know all about the plays that we have going on. Today we're looking at Federal Express, FedEx, our favorite delivery service, because this delivery service brings money. So FedEx was a play that was called out by a member of Hell's trading floor, Tempestuous Persephone, who was paying some very close attention to all of the stocks that had gapped down during the market volatility in September. Looked back at FedEx and saw this ascending triangle reversal pattern that had been showing up in the market after about 2 tests. And after the second one, there was speculation that, well, maybe it will fill this gap all the way up to $200 from its current trading price at between, well, at the time, $150 to $160. It was ranging in this area and bouncing between these levels, creating a flat top, and that was consistent with a market reversal pattern. Since FedEx is a less liquid stock, even though it is a large cap, it doesn't get traded as frequently. That means that it can move really fast on low volume. Persephone, you're far more than useful. You're a gem, and we love you. Thank you very much for the call out. This was an excellent play. Thanks to Persephone keeping an eye out. This stock, most of us got entries early on, somewhere around late October. I myself got an entry in this paper trading account that I use for all of my publicly listed trades. I do have my own portfolio that I trade privately that I don't share with anyone else, but this is the portfolio that I share in order to show everybody my trading performance using the same styles and strategies that I use with my real portfolio, just without doing ridiculous things like, showing how much I'm making or losing on a daily basis with my real money, because I feel like that might skew perspectives. So with FedEx, we are currently now trading about a third of the way through this entire gap. And if you don't understand the concept of trading gaps, this is what happens whenever the market creates a big move in after hours and pre-market after huge volatility. In the case of FedEx, they had a really bad earnings where they had announced they took a 33% surprise to the downside on a big earnings miss. Their revenue was down, but their biggest problem was expenses due to logistical issues and cost of fuel, as well as a contractor strike, which was putting them in pretty dire straits with all of their truck drivers. FedEx is really unique in that they don't actually have their own truck drivers. They rent out their trucks, kind of like how a franchise sells restaurant rights to restaurateurs. Think like Subway or Wendy's. Those companies, they rent out the property to their franchisees. They get shipped all of the stuff. Well, FedEx does the same thing. They give somebody a truck and a uniform, and they work as a contractor for FedEx and make the deliveries that FedEx gives them. And they're graded based on performance, basically. So they were having some trouble because there were a lot of grievances with their contractors, and the contractors were basically striking. So FedEx was having all kinds of problems at the same time. That led to this big gap forming on the chart. FedEx is now in a better position with their contractors, and while guidance is still pretty poor, they are still trading well below their standard PE ratio, that's price to earnings ratio. Given that FedEx is still a very profitable company with a $3.50 per share earnings per share ratio, they still offer quite a bit. So given that just because of that one bad earnings, which was unlike any of the other earnings that they had issued previously, they are now in somewhat of a recovery period. So even though their guidance is not good going forward, because obviously we've got a lot of economic problems and shipping and logistics industry is not doing well overall, FedEx is an outlier because they gap down so far that they are trading well below their fair market value. So now they've re-entered into this gap, and there is a very high likelihood that it will fill this gap all the way up to $200 back to where it was trading at before their earnings. So this is an opportunity to grab about $25 out of the market on this stock. Now, they trade options as well, and I know that most of the Discord that was tracking this play in particular was watching really closely and saw an opportunity at around $155 to $160. And as soon as it broke that level of 160 and traded above it, we ended up with a huge gap up yesterday. And we saw a bunch of traders enter into positions for this Friday, next Friday, and November the 18th. And I think it's safe to say that almost everybody is in the money except for those of us that bought like really cheap, far out of the money contracts out at like 190, which still is within the realm of possibility, although still kind of an outlier. So the take profit levels are 185, 190, and 200. I should actually put raise on this one so that we have those levels marked out nice and cleanly. There we go. So these are the take profit levels for FedEx. And as you can see, my entry, which was down around here, I think I made this entry either November the 2nd or the 4th of November. And the original risk on this trade was $420 US. That trade is now up $1,732. So this trade overall was, if I'm remembering correctly, I think I had a 7-to-1 risk to reward ratio on this. So now the take profit level, which is somewhere up around here, I think that where's my take profit? I never set the take profit for some reason. So I'm going to set my take profit up at 190. That's close enough. So the take profit on this would be just shy of $3,000 and would place us at a 7-to-1 risk reward ratio, or just shy of a 7-to-1 risk reward ratio. So that's the take profit level on this. That would put us just above this 100 period EMA. So it's kind of a stretch for a trade, but this is the potential when you see these opportunities present themselves. Let's drop down to the 5-minute, and you'll see that right now we've got FedEx, which has printed this massive bull flag, or bull pennant actually. I'm going to lock this element here. All right. So right now, FedEx has got this this big bull pennant forming here. We have a very tall flagpole, and it's been creating consistently higher lows every single time. It has not broken any previous lows. So this is an excellent sign of strength, and we just broke to the upside of the pennant so far. It may not be done forming this pennant. It could be going out even further than this. We have to wait and see. But so far, it's looking very promising. I'm going to keep redrawing this because I want to be very certain that I'm not leaving a trade open without complete confidence that I am trading an accurate technical pattern. What we're waiting for now is for a clear breakout above 177. 176.50 would be good. That would put us above previous resistance here and establish a new higher high. Actually, I'm going to delete that element because it keeps getting in the way. So we're going to place an alert on this. and let the Discord know. So the Discord, those of you who are members of the Demon tier on the Discord, you will get a alert in the Trading View or the TV Alerts channel as soon as that alert gets triggered. Let's take a look at some of our other indicators and see where we're currently at. So we've got a couple of things going for us. The 5-minute chart MACD has had some very nice pullback. We've got good consolidation on the MACD. This is something that we like to see. And we also have a bullish cross on the MACD here inside of the red take profit level. So this is actually a really good setup for continuation. This is a continuation setup on MACD. We've got a bullish technical pattern, which is our bull pennant. We have consistently higher lows on the price chart with a descending MACD, and then we just had a bullish crossover that was consistent with a hidden bull pattern on the RSI. So these are all continuation signals. All very good for us. Let me catch up with the chat. So let's see. Tell me what's up, guys. How are you doing? Tendy delivery. Hey, Captain Insano. Thanks for joining the YouTube, guys. If you are in the Discord and you're just listening to me live as I'm streaming, if you wouldn't mind jumping into the actual YouTube video and you can just mute my voice, you'll hear me in real time while we watch the charts. Sadly, I can't increase my speed on my charts or my stream. It's not letting me increase the stream fidelity. Which is weird because normally YouTube will let me just go ahead and bump up the speed so that I have less latency. You guys hear me closer to real time. But oh well. So let's go ahead and check out the SPY and see what that's doing. I did see that Excella was pushing off of its lows. It's a bit early to call it a reversal, but it is a good thing to see Excella moving back up. I'm currently just out of Excella for right now and waiting for more clear signs of a reversal. Basically, I'm waiting for fundamental developments in the company that will show that they are actually going to be profitable. Yeah, Pablo. The technicals are that we have a bull pennant, which this is just a very simple chart pattern where you have a very rapid incline or a big increase in the price. And the way that this forms a pennant is you've got lower highs and higher lows forming what looks like a triangle or a wedge that has perfect symmetry. Sometimes these trend a little bit further down, so you might see it bouncing like this. And that would be a bull flag because it has a parallel channel of highs and a parallel channel of lows. Both of those are bullish patterns because they tend to break to the upside once they break their resistance. But what's consistent about these patterns is they have a lowering trend of resistance and a rising trend of support. And what you want to do is you want to trade it in the direction once it has decided on its direction. We're watching this on the 5-minute chart, but what we really want to see is a candle closing far outside of either support or resistance. Typically what I'll do is I'll look at a 15-minute chart and I'll wait for a close on the 15-minute chart if I'm watching the 5-minute, because when you're watching that closely, it's very easy to get tricked into trading based on noise rather than trading based on a confirmed close. The other technicals that are in favor of a move to the upside in FedEx is a hidden bull flag, which is where you are seeing higher lows in the price chart and lower lows in the RSI. This is a signal that the market is basically gathering strength and support. And while you're in an uptrend, a hidden bull pattern is considered very bullish. It just means that the market is preparing to continue in its previous direction. The other pattern that I was calling out was, well, not a pattern, but the technical indicator is the MACD. That's the moving average convergence divergence. I have mine set to a 9 and 21, I think. Wait, what do I have this set to? No, I have this set to a 7 and 14. So this is a highly reactive, this is a fast moving average. And a fast moving average like this is going to be more reactive to price action. But what you're looking for are crossovers. Now we had a big move to the upside on the 1-hour chart. You saw we had this bullish cross on the 1-hour chart and it went crazy. And now we're like trading way outside of this price cloud, which is this little green area on the indicator. So this would normally be a bearish setup. You would want to short to the downside once it crosses over. However, when you go to the 5-minute chart and shorter time frames, you can see that it's moving sideways. The price is moving sideways as the MACD is recovering or declining. And this is a signal of consolidation. Consolidation just means that the price is contracting into a range. And this is normally bullish if you are on an uptrend because there is expansion, contraction, this pattern of big moves to the upside and then contraction, and then another big move to the upside and more contraction, and then another big move to the upside, and so on and so forth. So you trade these patterns waiting for there to be eventually a break of structure. So since FedEx is forming this structure, this is a symmetrical triangle structure specifically that came after a big uptrend. When these come together, we call it a bull pennant. And what you're waiting for is for the pattern to break out up here and close a candle in this area. And once it closes far outside of this pattern, then that is your buy signal and you trade for continuation. You buy right in this area and then you let it ride. That is how you trade a bull flag or a bull pennant. And BBIG is also doing really well. So BBIG, this one I saw the opportunity down here and grabbed more after hours. And you can see it's already been pushing up in this V-shaped recovery. As a matter of fact, if you look on the 30-minute chart, you've actually got a inverse head and shoulders position, or inverse head and shoulders setup. So you've got this pattern of a support here that was broken and then recovered, and now it's broken back above it. So now BBIG can continue back to the top of its wedge that it was trading in, or channel, depending on how you look at it. So I think that BBIG is going back up to $1. So I took this opportunity and scalped it down here because I saw this support. This is just above its lowest low. And I had marked this out as a spring on the Wyckoff pattern. If you're not familiar with Wyckoff charts, I have a video on my channel that you can look at for Wyckoff patterns. I was calling them out on AMC and successfully called out a few runs on AMC thanks to Wyckoff accumulation patterns. The trick is not getting is not calling it too early, because Wyckoff patterns can be really confusing and difficult to spot. But in this case, I'm reasonably confident, like 90% sure, that we have just hit the spring, or at the very least established secondary test support for BBIG. And what I expect is for BBIG to recover back to above $1, retest a new low, and then establish another level of support above $1 before continuing. That's the way I see it. Now, this can take a lot of time. This might take a few weeks. It might take a couple months. But we have a catalyst with BBIG thanks to the merger that they are setting up with Zash Global Media. And there's been a lot of volume push in BBIG today early on, and the price is recovering pretty quickly. So I'm wondering if there's something else going on, if there's some fundamental change in BBIG. I'm kind of suspicious that something is going on at the back end. Because this behavior, this happened before. And as a matter of fact, let's see. It was right here on the 23rd of September. There was a big recovery in BBIG. And there was a news, I'm trying to remember what it was. Yeah, the CEO was announced in September, and BBIG was doing this same stuff with these low volume pushdowns and then rapid recoveries. This was also right around the time that they had announced the end of the court case. Excuse me. Up or down in power hour. The way that I'm looking at the market, it looks to me like the market is contracting a little bit. And while it's very likely that the market will go a little bit higher, for me, it's not worth the risk to jump into a long position right now, because a reversal can come really quickly. The reason why I feel that way is because this market reversal came so hard and so fast. Trying to delete a few things. This market reversal came so hard and fast that now we're really testing the upper limits of what it's capable of reaching in such a short time frame. If I draw an extension on the last leg that we had, we're already at a 161% extension level on the fib. So 400 is huge resistance for the SPY right now. And you can see that we're starting to wick with this candle, and it's getting more and more difficult for the SPY to recover and get up to these levels. At the same time, you can look at this move that it made and draw a bear flag around it, and you can argue that it's doing the same thing FedEx is doing, which is just recovering for another leg up. But for me, looking at the way that the market is set up, like, it could break out and reach another level, but for the fib levels, that's 416, and that takes us outside of the megaphone pattern that the SPY has been creating over the last several months. So I find it highly unlikely that the market has bottomed and that we're getting like the full recovery and that the bear market is over. It's way too early for that, in my opinion. We haven't even uninverted the yield curve on the bond market. Like, the bond market is still in inversion. And the market always crashes after this uninverts. So once this comes out of inversion, that's when the capitulation occurs. So we haven't even had that yet. We haven't had the capitulation wave. We haven't had the yield curve uninvert. We haven't seen the big flush down across all major equities. And the PE ratio for almost all tech sector stocks is still blown out to ridiculous proportions. So the market is still way overvalued. And that's just fundamental analysis. Like, that's the rules of the market for the last 120 years. So it's not like I'm just pulling this out of thin air. This is how the market has behaved for the last 120 years. So for right now, SPY, I think, will probably continue pushing a little bit. I would expect day traders to start taking profit about 30 minutes before the market closes. And probably you'd see market makers trying to push things back down towards the direction of maximum pain. So if I go and pull up max pain on the SPY, so the maximum pain is sitting at 385 right now. So the largest number of puts and calls that would expire worthless combined would be at 385. And that's ideally where a market maker wants to push the price to, because that's where they make the most money. So will they get that? Highly unlikely. But they will try to push it down in that direction before the end of the day, because that's how they make their maximum profit, is by killing all the other retail traders that are in their positions right now that are still long on the market. So there's an opportunity to grab something that's like really close to expiration, and play it to the downside with them expecting them to push it down to, like, I don't know, they might get it down to like 395 or something. But we don't know. Like, this can close at intraday highs for all we know. Like, the market makers don't have complete control of the market, obviously. Otherwise, this would 100% work out every single time. But I do feel like the market is like it's made some really big pushes, and there's eventually going to have to be some pullback. I don't know when that pullback is going to come, though. It might come starting at the end of the day and proceed through the rest of the week, next week, or it might close at intraday highs and keep going starting on Monday, or it may need to consolidate for a while. We don't know. When there's these really huge moves like this, there's really no way to confidently assess where the market is going to go the following week. It's really hard to tell. The best thing that I can do is I can give you a glimpse at some of the technicals, and I would say that they're bullish, because you had this consolidation here on the MACD, and we're about to get another crossover to the upside after this sideways consolidation throughout after hours trading. If you break it down only to regular trading hours, the MACD is still extremely strong. So very good chance the SPY makes a new higher high next week. But the next high is probably going to be the last or the second to last high that we'll see in the market for the rest of for the next week. And there will need to be a big pullback, probably somewhere between a 38 and a 50% retracement level. So how that will look is, I'll say the market gets up to 405, because that's where I think its maximum momentum can get to. And that could totally be wrong. So this would change based on how high the market gets. But when I see a bearish cross down on MACD along with a bearish RSI divergence, and I see the market hitting a new high, then that's where I would place the very top of this fib retracement indicator at. So if the market gets to up to 405, that's where I would set this indicator at. and then I would play the market to the downside to about between the 38 and the 50% retracement level. So I would expect the market to pull back all the way to like 390, and I would just play that swing to the downside. But right now, the technicals look really good. So in this case, I'm staying out of the broad market, just kind of sitting off to the side. I got FedEx going on right now, which is unfortunately teleporting to the downside. This may be a fake out breakdown, but this is the first time that it broke lows. So we need to really pay attention to this now. And maximum pain on FedEx is all the way back down at 157. So market makers really want this thing to collapse right now. So this is a point where if you're not going to get out of your long position, you can consider hedging with some puts, just so that if you do see something like FedEx collapsing to the downside, you're protected from that volatility. Ultimately, I do think that FedEx will probably fill this gap somewhere up to around 185 or 190, even possibly 200. 200 is the last take profit, which may take several weeks for it to reach. But in the short term, FedEx does have some downside weakness where we might see the market pull it back down. Market makers don't want to see this thing. They don't want to see FedEx at these levels. Market makers hate this right now because all of their options that they open, all the call options they opened these while it was consolidating like way down here. So they're getting killed by all this volatility. The other side of it is that you've got some day traders taking profit right now. So that's the other possibility. There's one other hidden area of support right here, and thank you, Persephone, for pointing this out also in the chat. 175 is a major strike price, and the highest call open interest on FedEx is 170. So the bulls that are in the money are really in the money at 170. So they have an incentive to push this price even further. So any institutions that have gone long, which there are plenty, there's definitely some institutional involvement in here. This was how many shares was this? Just in this 5-minute candle, there was 180,000 shares traded at that level. I'm going to go get a calculator out. And I'm going to say that their average fill was at 173. So they spent $32.5 million on average just in this one candle, pushing this price. So the institutions that got into their positions, they are not getting out at these levels. They're in this trade to make some serious money. That was a lot of money that just pushed that market. And what we could be experiencing, as a matter of fact, is a gamma ramp. I'm going to give you guys here in the Discord a quick treat real quick. We're going to highlight some of the utility of our ScourgeBot. For those of you who aren't familiar with ScourgeBot, ScourgeBot is our proprietary options and stock squeeze analysis bot. We use this to go and find squeeze plays and any kind of market opportunities that you could think of. But if you look at this chart, one second, let me go put this all in the same window. There we go. So FedEx, which is now trading at 175.5, currently has about 2% of its float in the money on the call option chain for this next 30-day window. So every single Friday that FedEx closes at this price level, more and more call options are profitable for those institutions that bought them early. The biggest number of these is like at around 250. Now, this is only 2% of the float, but remember that FedEx is a very large cap stock. So this is a huge stock ticker that's part of, if I'm not mistaken, this is part of the Russell 1000 and the S&P 500. So FedEx is one of those big institutional target stocks where they're going to be investing long in for the next year, 2 years, 3 years. So as this pushes higher, you're going to have more institutions piling in on this, pushing the price even further up and buying more call options that are in the money and near the money, with the expectation that they're going to exercise those calls and gather more of those shares. And right now, FedEx is mainly held by institutions as it is. So those institutions that have been holding, that are still holding, are being encouraged to hold throughout this volatility by other institutions piling in at these lows. So this is the way the institutions are thinking, is that now that the price has been pushed down this low, they can start adding their positions and hedging against the volatility, gathering more to ride FedEx for the next 5 years and pull out like a 30 to 50% return out of the market over the next 5 years. Whoops, I had a YouTube video on a programming class that I was taking. Okay, let's see. Let me catch up with the chat. How's everybody doing? Big Bird says Biora is going to have a monster move out of nowhere. Talk to me, false angel. We'll take a look at Biora, sure. So Biora is still struggling at these levels right now. I'm kind of waiting to see if it finishes printing a megaphone pattern, but right now it does seem like it's breaking down to the downside because of the announcement of dilution. They are going to be issuing shares, so Biora needs cash. They're going to start diluting stock. That's not what we wanted to see, but it's what the company has to do in order to keep themselves flush with cash until they can take their product to market. So this megaphone pattern has broken down, in my opinion. So this is it, while it's possible that it could make a V-shaped recovery. It's not something that you want to bank on until you get some more strength out of the market and the technicals. Right now, volume is super low. It is increasing in the short term on the daily chart, but it's only a slight increase. Let's see, last Friday we had 1.15 million This Monday, we had 4.3 million shares traded, and we've been averaging around 1.8 million shares over the last 3 days, including today, which is now up to 1.26 million. So it could be forming out a bottom, but this may also just be a bear pennant forming consolidation and preparing for a move to the downside. So Biora is not looking that great on the technical spectrum right now either. Fundamentally, the company needs partnerships, which is what it's been fighting for to get more funding. And it does look as though they found a partner to purchase shares, but this is going to inevitably dilute their stock. And it is going to share more voting power with other institutions, which we don't know the motivations of those institutions. But for the record, I'm still holding on to my Biora stock. I haven't sold any of it. I am selling covered calls in it that are far out of the money, just trying to get a little bit of income out of the market and try to recover some of the losses. But it is going to take some time. Okay, FedEx is now starting to show a little bit of struggle. So it might be due for some pullback here. It's about the right time. So if it doesn't bounce here and this harmonic pattern doesn't play out, then FedEx might be pulling back for a 50% retracement. So we'll mark that out. That would place FedEx at 170.71. And a 38 level would be at 172. So if FedEx ends up breaking down further than 175, then it will most likely head to 172.5, followed by 170. We'll have to see how it reacts in power hour. Apologize for the background noise as a giant truck driving by. By the way, if you guys are not a member of Hell's Trading Floor and this place is new to you, I encourage you to consider jumping into our Discord just to try things out. We have a trial available on hellstradingfloor.com. You can sign up for 7 days and get to know the Discord and see some of the resources that we have available. Not only do we have our own Scourge bot, which tells us, it screens the market for short squeeze plays that are available for everybody in the Discord at Demon tier and above. We've also got some excellent indicators and alerts on stocks all across the market, both on the S&P and in the meme stock, community as well. Let's see what FedEx does right here. This is the support that it needs to hold. It has to hold 175. We've got day traders that are getting out of their positions. And we do have what looks to be like our first breakout down below the 20-period moving average on the EMA for the 5-minute chart. On the 15-minute chart, we're still holding it around the 10. So the 10-period EMA is still holding this thing up. We've been stretching out the VWAP all day long, though. That sounded way dirtier than I intended it to. But there, I said it. We're stretching out VWAP. That is true. Thank you, Disarray. Yes, we do have some wonderful developers that are always adding new tools to the Discord, both to ScourgeBot and for TradingView indicators. We also have an affiliation with TradingView. So if you are interested in supporting us and you are interested in this trading system that I use, this is what I use for all of my charting. TradingView is available for $25 a month for the professional edition. And this is by far the best trading software that I've worked with. There are still some things that I think that it could do better, but by far, like, the best software for charting out there, period. Between all of the programmable indicators that are available, and there are literally thousands of these things that are available, these are just my favorites. You can use this to develop your own trading strategies. You can have access to hundreds of different charts, layouts, and indicators. You can even build your own programmable strategies to create trading signals for yourself in the market. If you're interested in getting TradingView, I would ask that you check out the description of this video. We have a link to our TradingView affiliation, and that helps out our Discord. All of the money that our Discord supporters provide to us goes to paying for all of the market data that we have to pay for, which is extremely expensive. And we pass that on to all of the Discordians so that they can find their own plays as well. Okay, FedEx is getting pushed very hard to the downside. So this is definitely the time to set yourself up with a hedge, take profits on anything that was in the money for this Friday. Make sure you're hedged to the downside. Nobody should lose money on this trade. Absolutely nobody should lose money on this trade that was in here from the beginning. Hey, George, I appreciate that. If you guys wouldn't mind, if you haven't already, please hit that like button, subscribe to the channel so that you can get updates on whenever we publish new videos and live streams. And consider joining the Discord at hellstradingfloor.com, discord.gg/hellstradingfloor. And for those of you who are already in the Discord, if you wouldn't mind shouting out this video to everybody that you know, sharing it out on social media, that helps bring more people in. And we can call out these plays to everybody else in the market who's making big wins and looking for more. Hey, Hikari, are you saying the reversal incoming on FedEx or SPY? Oh God, DWAC. Yeah, it's possible. It's definitely possible. I struggle with the idea of playing that kind of market play just because, like, it feels like it's so manipulated, but at the same time, I mean, money is money. Okay, FedEx is distinctly breaking down. There will be opportunities to get in on again on a re-entry, but for right now, the way I'm looking at how FedEx is set up, distinctly looks like it's going to break down in the short term. So look for an opportunity to re-enter next week. And for now, we'll just get out, take our profits. Always, always take your profit when it's in front of you. Don't get greedy. Never, ever, ever get greedy. And then when FedEx prints its next leg, we will be watching very carefully for that next breakout level. So I'm going to go ahead and set up a support alert here on FedEx. It's distinctly breaking down. 175 is not holding up like it's supposed to. So it's time for a retrace. I'm not saying that you need to close your positions. It's all up to you guys. You guys make your own calls. But FedEx does still have a gap to fill in the long term. There are going to be better opportunities for entry, in my opinion. I think that once it touches 172.50 and finds support there, then that will be the opportunity to get into new positions. Okay. So this bull flag has broken. If we go to the 15-minute, we can see that we've had two closing candles below, and now we are printing a bullish hammer candle on the 15-minute. If it does end up closing green in the next 10, then we'll see. But that alone isn't enough to convince me to stay in the play. I'd rather take my profit, get everything off the table, and wait for that consolidation, for that pullback to play out. Wherever it plays out to, we'll go look for an opportunity for a reentry. I think that it's going to end up somewhere around 172.50 with a low of 170 potentially, which would send it back to touch around the 50 period EMA on the 15-minute chart. On the 1 hour chart, that would be a test of the 20 EMA on the 1 hour chart. So my expectation is for FedEx to do this number, and then we'll end up with a very nice, healthy bull flag with a 38% retracement on the 1 hour chart. See, the 38 sits right below our 172.50 level. This is where I think the likely pullback point will be. We'll find some support, bounce off, take off for the next leg to the upside. If you're in profit, take some off the table, be happy with your gains, look for the next play, wait for this one to develop. Don't get greedy. Hey, Tridvino BG, where did the short market thesis go? It went out the window with CPI data, man. when the CPI report printed under, and I should have been paying attention to this, but they had the CPI forecast way too high. They had forecasted that CPI was going to print at 8.1%, which was way higher than they should have had it. So my interpretation of that is that they placed that number strategically with the expectation that it would actually come in under and the market would react positively. Because right now everybody is hurting and a whole bunch of institutions are really pissed off with the Fed. I think the Fed is getting a lot of pressure from Wall Street, along with you know the cabinet and Congress. So by putting in a high estimate and with a low print on CPI, this gives the market an opportunity to rally and increases confidence in the market. So as soon as that CPI print came in, things just reversed, and I'll admit it, I was wrong. Like, I was just flat wrong. The day before, I was like, "Yep, short the market," and I'm happy with that decision. And I was just flat wrong. It's the way it goes. Sometimes you're just wrong. So the CPI data came out, and that completely reversed the thesis. A whole bunch of people got rug pulled. So we switch long, get out of the short positions, try to take as little of a loss as you can, and then ride that volatility to the upside. When these bear market rallies happen, you got to be quick. You have to be reactive. Sometimes it just happens like that. Like, we had that happen with the last CPI report. We had a huge drop because CPI report was so bad, but then the market reversed to the opposite end. And somebody remind me exactly what the catalyst was that caused the market to go back up. I think it was like I think it was like that Fed pivot rumor. But I'm pretty sure that the actual article didn't print until several days later. But in any case, there was speculation that the market was going to turn around because of Fed pivot and like a whole bunch of other things that were just lies. It wasn't true. But it didn't matter. And even though the CPI report came in hot, the market went the opposite direction. And we got that 50% retracement on this market move, just like then. See, we had this move. It was actually a 61% retracement level. So as soon as we crossed down below the 50, I went long here. And then the market kept going up. So you just trade the charts that are in front of you. When you're wrong, be willing to admit it and switch your thesis. And it's not about flip-flopping. It's just trading the chart in front of you. If you're wrong, be willing to admit that you're wrong and then change your thesis. So I'm never going to get it right 100% of the time. There's no trader out there in the world that's ever going to get it right 100% of the time. You just do your best. Yeah, SPY is getting hit hard. I agree. The SPY is now starting to look like it's due for retracement. So I'm considering SDAO for next week. Maybe that's a little bit aggressive, but I am considering shorting the market. Because right now, when I look at, let's see, I think we're out of FDX. So actually, I'm going to go ahead and close the paper trade as well. So 1,642% profit on an original risk of 420. That's almost a 400% profit total. That's an excellent trade. I'm going to wait for this re-entry opportunity. As soon as I see this, I'll go long again, set my support or my stop just below the 200 period EMA on the 2-hour chart. And that will be my stop loss level. And then we trade FedEx to the rest of the gap. And if we do end up crossing back above 176 first thing in the morning, then we chase. That's just what we do. The thesis remains the same. We're just looking for a better entry, and we're getting out now because Friday is take profit day. Everybody takes profit, so we're trading the market psychology, knowing what the rest of these guys are going to do, what the rest of the market will do. We want to be sure that we are accounting for that mentality. But anyway, back to what I was saying. I'm going to look at the Dow Jones Index, which I see that we have a bearish RSI divergence, and we're actually about to print another one. So we're about to get a second bearish divergence on the 1 hour chart, coinciding with a MACD bearish cross down here on the 1 hour. If I drop to the 15-minute chart, I see that we also have another bearish divergence right here. And we've had another bearish cross down that's forming here. So this is right about the time to hit an SDOW call. I think this is actually perfect timing. And the idea is that we're just trading the volatility in the market to take a short position against where we're currently at. So I'm going to, let's see, I'm going to look for, okay. I feel good about a stop loss right here. I'm going to set my take profit just above this support. This is the support that I'm speaking of right here. So I'm going to set my take profit level right there. And this is a 3-to-1 risk reward ratio for me. I want to echo this trade on SDOW because SDOW is a leverage chart. It's cheaper. So that would place me at $28. So I want my trade to be for this. Because of the leverage, I actually get 5-to-1 risk reward ratio. That's nice. I'm going to take a limit on this, and I'm going to do a 500. We'll bump that up to 750. Perfect. That puts me at a 1% risk of my total portfolio. That's how much I have in play. And I got my fill. So now I'm trading SDOW, and this is a swing over the weekend. And I also want to expose myself to the tech sector as well, because the tech sector is really hot. SPY went totally ballistic. So I want to look at the Qs, and I see that I've got a big cross down here. We're starting to hit this resistance here. We have a bearish divergence on the RSI on the 1 hour and the 15-minute. So that matches up with my thesis very nicely. So for this one, I want to go into SQ. Let's see, where is my previous support here? I'm setting up my take profit level right here. That's a very good level. I like this. That's a 4.7 risk to reward ratio. That's a good setup. You can do a more conservative one and trade to the bottom of VWAP for a 2-to-1 or 2.5-to-1 actually, which is that's a really good setup too. And that's a more likely trade to get your full take profit. Normally, if I exit this trade, or if I get into a trade like with this take profit level, if I decide that the market is turning, then I'll exit early, and I'll usually exit right around where my conservative take profit level would be anyway. So this would still get me a good scalp. But I'm going to go ahead and enter into some SQ contracts. And we'll see how that plays out. Okay, I got a request for a heat map on FedEx. There you go, General Disarray. I just threw that into live stream chat in the Discord for you. So you should get an options heat map. Right now we are getting a little bit of pushback, I think. So let's go take a look at FedEx. Now, FedEx is pushing back into that pattern. So let's see if this was a fake out breakdown. But I think that this is the retest here. Yeah, we're getting a gravestone here. The 15-minute is, it's on the 5-minute too. Yeah, we're going to print a gravestone candle here. FedEx is about to drop. So we'll probably see a gap down tomorrow on FedEx. My guess is a big institution is going to try to get a bigger position starting next week. Yeah, we got two bearish patterns now. We had this pennant that broke down, we had a retest and a failure, and now we've had a bear flag. So this one's done. It's done for now. Doesn't mean that it's done completely. Like the thesis is still there, but we're printing too many bearish setups, and now we have this gravestone doji candle. So this is all printing market reversal for FedEx. The volume is gone. Volume direction candles are below its moving average. MACD had a bearish crossover. It's slightly recovering here on the 5-minute, but if we look on the 15-minute, we're still expanding in bearish territory. So it looks like the consolidation is going to take us down to the low 170s level. Yeah, I have to concur with Hikari that this FedEx is now starting to pull back. So this is a message for everybody else who's just getting here. Most of the Discord entered into FedEx way down at the 150s, 160 level. And we've been in this for this entire duration of this move. So most of us are up the entire 10% move on this leg. So now we're getting some pullback, and we're likely going to form the rest of this bear flag. So after a while, we'll review this, but this is my expectation for FedEx now. The pennant broke down, so I'm expecting a bear flag. or a bull flag to form out the rest of next week. So after hitting this high, we'll get a third test and a breakout at these levels. Okay? So don't get eaten by theta. Wait until we break down below this level. Maybe get a test down as low as 172 before we break out. We just got to wait it out. Yeah, shout out again to Tempestuous Persephone for calling out FedEx early on so that the entire trading floor was able to get in early on this move. It was an excellent, excellent play. Augustin Perales says, don't we have a diesel shortage? Yes, we do. We do have a diesel shortage. That's actually a serious prevailing problem right now. Oil analysts say there's simply not enough refineries to meet the demand for diesel. I'm going to pull up a New York Times article, which, thanks to a wonderful plugin that I have, we do not have to deal with these paywalls. Thank you, no paywalls. So the price of diesel, which powers the economy, is still climbing. Russia's invasion of Ukraine is one reason why the fuel is scarce. Another is a series of years-long intertwined events that cover the globe. Gasoline prices have dropped as much as $1 a gallon since early summer, easing a financial strain on many people. But the price of diesel, the fuel that moves trucks, trains, barges, tractors, and construction equipment, has remained stubbornly high, helping to prop up the prices of many goods and services. On Thursday, a gallon of diesel fuel in the U.S. cost $5.36.2 on average, according to AAA. That was down from a record of $5.816 in June, but well above $3.642 it cost a year ago. A gallon of regular gasoline now averages $3.803. The surge in diesel costs has not garnered the attention from politicians and the public that the jump in gasoline prices did, because most of the cars in the United States run on gasoline. But diesel prices are a critical source of pain for the economy because they affect the cost of practically every product. The economic impact is insidious because everything moves across the country powered by diesel, said Tom Kloza, the global head of energy analysis at the Oil Price Information Services. It's an inflation accelerant, and the consumer ultimately has to pay for it. Sherry Gardner-Brumbaugh, the president of Gardner Trucking in Findlay, Ohio, said the weekly cost of fueling one of her heavy-duty trucks in September was $1,300, more than double the $600 she paid 2 years earlier. Quote, a good portion gets passed on to my customers with a fuel surcharge, she said. Both gasoline and diesel prices are tied to the price of oil, which is set on the global market. The price of each fuel immediately shot up after Russia invaded Ukraine in February, but their paths have diverged sharply. Over the last year, the cost of diesel has ballooned by more than 40%, compared with 11% for gasoline. Diesel prices are high because the fuel is scarce worldwide, including in the United States, which in recent years became a net exporter of oil and petroleum products. Oil analysts said there were simply not enough refineries to meet the demand for diesel, especially after Russia's energy exports fell when the United States, Britain, and some other countries stopped buying them. Diesel inventories are always a bit low in the spring and fall, but during agricultural planting and harvesting seasons, but this fall, supplies are at their lowest level since 1982 when the government began reporting data on the fuel. The tightest market is in the Northeast, where oil refineries have closed in recent years and where the diesel crunch is complicated by winter demand for heating oil. The two fuels are virtually the same, but taxed differently, and especially cold winter could make the situation worse by increasing the demand for heating oil. This article goes on for quite a while, so I'm not going to read the rest of it, but I think that you guys get the gist of it. Right now, cost of diesel is just absolutely slamming the economy and pushing more inflation woes onto the consumer, and that trend is likely going to continue pretty severely going into the future. Yeah, Scrap, what's going on? Mm. Yeah, I can see your point. So what this all translates to for everybody else is that all end consumer products are going to get way more expensive because the shipping costs of moving them just based on the fuel alone, which diesel powers trains, barges, oil tankers, it powers everything. Diesel powers everything that moves big product. So that's going to put massive strain on the economy once it starts to get really out of hand. Well, is FedEx going to push one more time at the end of the day? I'll be shocked if it does. I think it's coming back down. It's a nice recovery, but I don't think we're going to get that. I don't think we're going to get another push until next week. We'll see how it goes. Okay, looking at the Qs and SQs. So currently SQs are moving green while the Qs is also going green. So that's inverse of itself. Interesting. So you've got investors that are piling into SQs right now while the Qs has got lowering volume and the price is rising. So that's sketchy. Yeah, more bearish divergence. More and more bearish divergence. Okay. Let me catch up with the chat. Biora's getting froggy. 100,000 in a 5-minute candle. Thanks for the shout out, Clint. Appreciate that. Oh, actually, I already had a Biora chart up. Interesting that we're getting that push now. Very interesting that we're getting that push right now. Could be shorts covering. What's crazy here is that now Biora, which had a market cap of more than 300 million just a couple months ago, is now at a market cap of 52 million, which is drastically below its fair market value. The intellectual property they own is worth literally hundreds of millions of dollars because of its capacity to completely change internal medicine. So this stock price is not reflective of the fair value of the company by any means. Let's go review the stock market map and see what's going on here. So energy has been pushing all day long. Tech sector is on the whole, very green. We've got some pullback in some of the hardware manufacturers as well as Raytheon Tech. Health technology took a bit of a hit, especially the big numbers like Johnson & Johnson, Eli Lilly. I imagine Eli Lilly is getting a lot of backlash because of the verified Twitter account that's been trolling Eli Lilly. For those of you that didn't see this, this was actually pretty funny. Eli Lilly had a troll account that got a verified badge because of the changes that Elon Musk made. Let me go see if I can find it on Twitter. Because now that Elon Musk has basically made it just pay us $8 a month and you get this verification check mark, which is stupid because it defeats the purpose of verification. Anybody can pay $8. It's not a barrier for, like, I would pay $8 just to troll a multi-billion-dollar company. Because why the hell not, right? So, like, it's not a barrier. If anything, Twitter is now going to become a vehicle to just harass anybody who's on the platform because anyone can get verified as long as they have an iOS device. And I can get a virtual machine for an iOS device, so that's not even a barrier for me. It's kind of hilarious. But I'm trying to find the Eli Lilly account now. Yeah, it's Eli Lilly and Co. the Twitter account got locked. The account got locked, so I'm gonna have to go to Google to find it. But the basically this troll account got verified and set itself up to look like Eli Lilly and Company, which is the world's largest manufacturer of insulin for diabetic treatment. And the troll account was saying things like insulin is now free, and then that that garnered a lot of backlash from the public. And then they started saying, "We're just kidding." Illogical. Do you happen to have the tweets? Because you were pointing out the rest of the saga to me. Maybe he's not here. Here we go. Well, Business Insider actually printed the story on it, so this is a thing of beauty. It's truly hilarious. So, Twitter verification trolls targeted the pharmaceutical firm Eli Lilly, falsely announcing that insulin is free before claiming it would cost $400 per vial. 2 Twitter users bought verification to impersonate a pharmaceutical company and pretend that insulin was being given away for free, seemingly satirizing the long-running debate over the price of the drug in the U.S. Both accounts pretended to be Eli Lilly and Company, who introduced the world's first commercially available insulin product, a necessity for people with diabetes. According to Fortune, the insulin Humalog is Eli Lilly's biggest revenue driver. On Thursday, an account with the username Eli Lilly & Co. tweeted, quote, "We are excited to announce insulin is free now." The blue tick made the account look official, as it previously marked legitimate accounts before Elon Musk let users purchase one for an $8 monthly Twitter Blue subscription. The fake tweet got around 11,000 likes before the impersonator was suspended. The real company then apologized for the misleading message from a fake Lilly account and added that users should only trust the LilyPad account. Twitter's font also means trolls can use a capital I instead of a lowercase l to appear similar. Another troll added to the confusion by verifying the account LilyPad Co. and similarly apologizing for the previous impersonator, using the same wording and claiming that it was the official account. The second pretender added, "Humalog is now $400. We can do this whenever we want, and there's nothing you can do about it. Suck it." At the start of the year, Eli Lilly lowered the price of Humalog to $82.41 for an individual vial amid a long-running saga over the cost of the drug, which is vital to many people with diabetes and a number of other conditions. An investigation by Congress released last December found that several companies have been able to, quote, "get away with outrageous prices and anti-competitive conduct," because Medicare isn't allowed to negotiate for lower prices. Hedge fund manager Martin Shkreli achieved infamy in 2015 when he raised the price of an anti-parasitic drug from $13.50 to $750. Musk has said that Twitter will ban such accounts that don't clearly state that they're parodies, but trolls still have had their fun impersonating the likes of George Bush and O.J. Simpson. The platform has twice introduced and twice reversed an official tag to distinguish some legitimate accounts. Eli Lilly told Insider it was, quote, in conversations with Twitter. Just an amazing, amazing story. It's so hilarious. Like that made my whole week. That whole thing made just my whole week. It was just too good. Oh man. Okay. So let's see. What is the market doing now? All right. FedEx is still trying to fight for air at 175, but looks like it's not going to get there. If this prints another engulfing red candle, then we have ourselves a tweezer top. And it will break this bear flag that was drawn here on the 10-minute chart. It's really close. It's really, really close. Oh, you know what this might be doing is printing a, this might be printing a descending triangle now. Well, we'll go find out what the market wants to do, but Dow Jones is throwing multiple bearish divergences and has had several cross downs on the MACD. The 1 hour is making its pullback. We're just going to have to see what happens. We're in the last 7 minutes of the market. Last 7 minutes. This is your last chance to make your decisions. I'm going to also be targeting the SPY. With some SPXU contracts here. SPXU, which has now formed a double bottom, although I don't treat this with the same level of confidence as I treat SPY. If you're going to draw technicals with a and use a leveraged ETF, you always want to draw your technicals on the ETF itself and then take your bet with the leveraged ETF. Don't draw technicals on the leveraged ETF. What I will do here is I will go ahead and put SPXU on this chart. I will overlay them so that I can get a rough idea where the prices are. And I can see that 395 is above my, 395 on the SPY is about where I want to have my strike on SPXU, which that's 1575. So I want my take profit down here at like 390. That'll put me at like 1650 on SPXU. So for me, ideally, I want to get an at the money contract for SPXU. That would be a call for 1550. Which that's actually at a reasonable price right now. That's going for about $44 per contract. So we're going to go ahead and enter into a short position. I'm going to set my support right here. This is a very tight stop loss, so just be aware of that. I'm setting my take profit to $3.90 and 90 cents. That's a 4-to-1 risk to reward ratio. I'm going to do a quick limit order right here and a 0.5 risk on my portfolio. Go ahead and enter. Let's see if I can get my fill. And there we go. We've got it. So I'm in that position. My maximum loss for this position is $381.10 USD. That is what my stop loss is set at. And my take profit is at $390.90. My total profit on this trade, if I hit my full take profit, will be $1,542.94. This is a over the weekend swing. This is not normally how I would trade this, but with the market setting up this new top, I want to at least be exposed to the market a little bit. And I am taking a risk here with my paper portfolio because I can't actually adjust my positions in after hours. So I won't be making any changes to this until Monday. But we'll see how it goes. Right now, I'm expecting the market to pull back pretty dramatically with day traders taking profit and exiting out of their positions. And I'm hoping that that selling pressure will continue throughout the weekend in the futures market, and it will push SPY back down to 390. And if we open the day on Monday below 390, I'll have hit my take profit on the SPY, and more than likely I'll be getting my full take profits on Qs, SQs, SPXU, and Dow Jones and SDOW. So I've got 5 positions in total right now. 4 positions in total, excuse me. So I got an SDOW, I have a SPY position, a Qs position, an SQs position, and I was also going to do an SPXU position also. So it's already moving in my direction. So I'm going to take profit at 1650, set my stop loss here at 1510. And okay, I got my entry right away. It's not the greatest fill, but that's okay. And because this is a levered ETF, my take profit, although my my take profit level, if you look at the SPY shows that if I hit my take profit level, the SPY will be at $390.50, and that would put my take profit on SPXU at around 1670. The total risk to reward ratio on this is 4.05. That's a 4-to-1 risk to reward ratio. But if you go to SPXU, I've got an even lower price here on SPXU, but because this is at 1650, but my risk to reward ratio is at 6.37. That's because this is a leveraged ETF. This is a 3 times levered ETF that tracks the SPY. So whatever the SPY does, this will do 3 times as powerful of a move. So if the SPY drops massively starting on Monday, then not only will I hit this take profit level, but there's a chance that I might see this exceed my profit level at open, and I'll take profit somewhere even further out than this. So this is the power of leverage ETFs. Just be aware that whatever you risk here, this can go against you just as quickly. So it is cheaper, and it does have more leverage, but leverage works both for you and against you in the same way. So make sure that you're not risking any more than you are willing to lose. And there we go. We're set for our positions to swing into Monday. So that's going to be it for the market today. That was the bell. I missed it by about 50 seconds, but oh well. Hopefully you guys got into your positions and you're feeling good about your trades today. Seems like everybody did really well today. FedEx was an excellent play. Once again, big shout out to Tempestuous Persephone for calling out FedEx early, getting everybody a nice early, very cheap position compared to where we're trading now. Hopefully you guys have taken a huge profit. And if you are still in, I would hope that you have hedged yourselves to any downside volatility. If we see a big pullback in the market, FedEx is probably going to suffer that same pain. So we expect if the market is going to drop on Monday, that FedEx will also drop. We'll exit any short positions once we see support being met here. I'm expecting that support at 172.50 with the possibility to pull back all the way to 170. If we were to drop all the way back down to this level, we do need to be careful of other bearish setups. But if we do end up getting that big pullback and we establish a new higher low here, then this would actually form out a harmonic pattern in the form of a cipher. So if we do end up with any kind of, if we do end up with a cipher pattern, whoop, I got the wrong one. Did I get the wrong one? Oh, no, I didn't. I just drew it badly. So. It's probably a bit too early to tell yet, but we'll keep an eye on it. I'll turn on my cipher pattern for this chart, and it'll call out any ciphers that show up on this in the future. Why won't this order go away? This is a little bit annoying. All right, so let's see. We got all of our positions. Had a very nice take profit today. We got a, let's see. In total, we took about 3,000 in profit today. This portfolio was trading at around 72,500 earlier today. We took profit and got out of all of our positions between FedEx and the SPY. So that's not a bad trading day. Now we are in basically all short positions for the market on Monday. We'll see how that plays out. Let's go ahead and catch up with chat and see what else you guys want to take a look at before we close out the stream today. Can we take a look at BBIG? Of course we can. Of course we can take a look at BBIG. So BBIG, I was talking about this a little bit earlier, but when we saw this big drop to the downside on BBIG, I went and added a position here at around 70.5 cents. And that is now way up in profit. So I marked that position in after hours, actually. That trade happened right here, actually. So literally tick the bottom. That was at 170. It was at 70.5. And my take profit on this is for $1. That's we'll call that close enough. So that's a 7.4 risk to reward ratio. Actually, considering that the stop loss is at 67 cents even, that actually puts it around 8%, 8 to 1 risk reward ratio. Why do I choose $1? Because that seems to be where BBIG likes to sit at. Whenever it gets a nice big pop in volatility, it likes to go back to $1. And we always get that big push back up to $1. It comes very quickly. And since we are now retesting this descending wedge, I'm feeling confident that BBIG is going to start making big pushes. I'm also expecting a bit of news from BBIG just based on the weirdness of the volume lately. I have a feeling that that BBIG has some things to share with us, just because we've had this same activity right before big pops, and it looks very similar to, like, say, this area in the chart, as well as this one and this one. And then we get these big volume pops the following day. So I'm going to keep a close eye on my news feed on BBIG. I'll let you know if I see anything. But there's been some subtle weirdness on the volume candles that tell me that something else is going on. So this was one, and now we had this one right here. So if we break out above the 200 period EMA on the 1 hour chart, then I think that would be good timing for anything that the Vinco team has to share with us, if that is the case. Or if there's some other fundamental catalyst, it could be something like an institutional buyer or maybe a new venture capital firm adding to their position in BBIG or jumping into BBIG as investors. Could be new board members, we don't know. But there's something happening. There's something happening. General Disarray is asking about, how about BNGO? BNGO. I'm going to close all these charts and give myself back a little bit of PC resources. BNGO. Bionano Geonomics. Ooh, look at this one. I missed this move. Okay, so I see it's been doing this a lot lately. These big upside pushes. And it's getting met with resistance. There's a new level of resistance that it keeps hitting every time. So it's like just barely getting higher highs with lower highs on the RSI. So I don't like how that looks. But it is now trading above its daily 200 EMA. And that is a good thing. The other thing that I see, there's an inverse head and shoulders here. So this is a fundamental pattern that looks very good for this ticker. I'm going to set the neckline right there. I'm not counting that volatility. Okay, so I know we had this big push for earnings. I'm going to go to a 1 week chart. So on the weekly, this whole thing has been printing a inverse head and shoulders, and now it's preparing to break out. I'm not sure what this big volatility pop was. I'm guessing that it was just earnings. But now we've crossed the 50 weekly EMA. We've crossed the daily 200 EMA. And on the 1 hour chart, we've got bullish crossovers on all of our EMAs. The 4 hour chart is probably going to look pretty similar. Yeah, we've had bullish crossovers on all of the 4 hour EMAs also. So now is about the time to start thinking about adding to a position on BNGO. This is definitely a meme stock, but this is a company that's been getting patents for its new genetic testing systems and methodologies. And I remember this was one of Boulet's plays. Boulet was paying very close attention to this stock. This is one of his originals. Now that we're trading above the 200 EMA, it does feel a little bit different. And we had a good earnings from them for a change. Positive on earnings per share and on the revenue side. That's good. They're reporting about the same level of revenue, which is it's resulting in a net loss on their earnings per share, but it's very close. Let's take a look at some of their financials. All right, so they're a small float of 290 million, so not a massive float, but not small either. Is definitely not a micro float stock, that's for sure. Their earnings have been flooring all year at around, I'd say, an average of 0.09 negative. Their net income is declining, but their profit margin is increasing. So their revenue is going up, their net income going down, most likely because of expenditures, but their profit margin is getting tighter, and they're starting to improve their financials. Their performance over the last 6 months has been very positive. I really like this setup. Technicals definitely in their favor. Wall Street analysts are forecasting a buy. Very good. Let's take a look at the financials. So total assets. Their cash and short-term expenditure it's slowed significantly. So they only spent about 7 million of their cash, and they've got 180 million of cash equivalents left. Their receivables have risen. So their accounts receivables are up at 5.8 million. That's very good. Their non-current assets, excuse me, in property and equipment is around a net 25.6 million. Let's take a look at some of their liabilities. Current liabilities is 2 million in short-term debt. That's almost nothing compared to their cash. Their accounts payable is at 9.4 million, which is a little bit more than I would like to see. I would like to see their total cash receivables to be equal or greater than their net accounts payable. Their payroll's at 6.7 million, so definitely accounts payable is where most of their money is going. Shareholder equity is still in decline, but only slightly. Okay. Their book value per share is still slightly declining, but it's slowed its decline massively. Book value per share ideally should be above 5, but no more than 20. Because this goes directly into the book versus price ratio. Okay, financial situation for BioNano looks really good. Let's take a look at some of their short interest. This is one that I want to really do a deep dive on, because I do love this setup. And this is one of Boulet's plays. Boulet got me tuned into this one in the beginning. And as I recall, he actually got us involved in the move back in July, where this thing shot up from like $1.50 all the way up to $4. That was a big win for the trading floor. Okay, short interest is quite high. We got 22% of the free float on loan, with 15% of the stock's float sold short. That's about 45.8 million shares with a confidence ratio of about a 3 million. I take it back, like 2.5 million margin of error. The days to cover is going up. I do. Oh, I'm not showing it. My bad. I meant to be showing my Ortex chart. There you go. So I'm looking at Ortex now. This is, I haven't really changed anything. This is the short interest, which you can see that ever since it had this big move to the upside, shorts got squeezed out and got out of their positions near the near halfway down. So they got scared away, and now they've been piling in, and now the stock is starting to get volatile again. This last candle is no longer accurate. This is not showing the daily change. We're now trading at 266. So shorts are getting pushed out. Days to cover is at 9.24. Really? Is volume truly so low that these shorts are stuck in this for 9 days? Oh, that's juicy. See, the market's turning around now, and it's been super green. So if the market continues on this trend over the long term, then this could really hammer shorts big time. This is the heat map for the calls open interest, and you can see that $2.50 and $3 for next Friday are huge. There's a lot of like ridiculously out of the money ones for like January. Those are a little bit like out of the realm of possibility unless there was an active short squeeze, so I wouldn't touch those. But let me look at the short squeeze stats for BNGO and draw you guys a gamma ramp. Okay. So it is creating a gamma ramp, but it's not huge. Only 3% of the stock would be in the money at $5. Not even, like 2.7% would be in the money at $5. So there's not much of a gamma ramp, at least not right now between November and December. Most of the gamma ramp is for December, actually. Or not December, January. Let me check this out. So this is the gamma ramp if you look at it just only on January contracts. This is that chart visualized, that heat map chart that I showed you. This is that visualized only counting the January call options. So not a huge gamma ramp. 2% of the float isn't big enough. If this grew to like 10, 15, 20% of the float, then I would be really interested in a gamma squeeze. But BNGO is definitely starting to get interesting and volatile. So I'll probably do a little bit more research on this and see how close they are to turning around their financial situation. It looks good so far. I'm going to take a look at a couple of other things off screen while we dive into their charts a little bit. Definitely setting up nice higher lows. Got a little bit of an ascending wedge going on, but I really like the look of that inverse head and shoulders, such to the point that I'd almost just like not even look at it. Got to consider all the possibilities, though. Let me look at one more source on my own. Let's see. Financials, earnings, and expert opinion on Wall Street is still pretty bearish. But you know what? I'm gonna keep this on my watch list, and I'm gonna pay very close attention to BNGO. So I'm adding this to the watch list. And I'm going to put it up at the top. We'll keep an eye on that. Okay. Sadly, I think that's all I got time for, guys. I got to go prepare for a meeting in 10 minutes, so I'm going to drop off here. I want to thank you guys all for tuning into the stream. I really appreciate it. Let me catch up with chat one more time. Have time to cover Beam? I'm sorry, Scrap Queen. No, I'm not going to be able to cover that one. But I'll tell you what. I'll write it down and I'll drop you guys some DD in the trading floor when I can come back. Okay. I'll check out Beam. Hey, Pablo. Yes, if I do really like the technicals on BNGO, I will put a video on it. I'll do a combined DD on the fundamentals and technical situation for their company. All right, great. Thank you guys so much for tuning in. I really appreciate it. Great trading week. I know that the CPI data report really did kind of throw us for a loop, but we made a nice recovery. We're going to be short the market for at least next week, since we are printing a little bit of bearishness on the short term. Daily, we've almost touched the 200 EMA on the SPY. The Qs are looking very similar, with us coming up to around the 100 period moving average. And keep in mind that currently the Dow Jones is still outperforming the Qs as of late. So right now we've got Qs and Dow Jones showing that the let's see, wait a second. This chart got messed up. Oh well. I'll have to fix it, and I'll drop another video later on once I get a chance, because I have to go, unfortunately. But I will let you guys know when I see a new opportunity. More than likely, we're going to see a big push in the market to the upside over the long term, though. So after we get this pullback out of the way, I don't want anybody to think that I'm going short on the market again for the long term. That's not what this is. We're trying to scalp some cash out of the market, get a little bit of recovery on that big pullback that I'm waiting on. So if we see some pullback in the market and we retest this 50 period EMA on the daily for the Qs, on the SPY, if we get another retest of the 50 period EMA on SPY, or even the 100 would be good enough. But I think that we may pull back as far back as the 50 EMA. If we do end up with getting that pullback, then that would be a good place to take a long position for the duration of December. If it looks like the market is going to make a recovery over the next several weeks to months, then we'll look back at going short on the market again in the spring, as was the original plan. Things were looking really dire for the market, which is why I went short early. But that CPI report really did change a lot of things fundamentally. Other things that we need to keep a very close eye on, as I mentioned already, is that the diesel shortage is becoming a serious problem. So we're going to want to watch the energy sector, pay really close attention to diesel supply, and check in with all the logistics industry leaders that provide all the transportation across the United States. Because if those guys stop shipping and they're not able to afford the diesel, then that's going to basically grind the entire economy to a halt. If diesel stops flowing in the U.S., the economy stops, and that would be absolutely disastrous. It will require intervention from Congress to do something about it. So those are the things to watch out for. Thank you guys so much for watching. I look forward to seeing you in the next one. If you wouldn't mind, on your way out, please leave the video a like, subscribe if you're not already subscribed, and if you're new here, please consider joining Hell's Trading Floor. at hellstradingfloor.com, where you can join our Discord at discord.gg/hellstradingfloor. Thank you guys so much, and I will see you next time. But until then, have a hell of a time in the markets.